So a recap of the market's performance has really seen the January effect kicking in, bringing out global equity markets. In the US, we have the likes of S&P 500 on the 6th consecutive session of gains, and of course this year-to-date gain is seen about 3%, rather spectacular level. This is also shrugging off some of that volatility seen in the bond market, where we have the US 10-year yield surging past 2.5% level. A lot of this concern actually ignited by the Bank of Japan on Tuesday in the Asian session. For Asian markets, however, we are seeing the investors here taking a little bit of a breather after that run since the start of this year. So some of these concerns starting with regards to the bond market, but of course I do think that the leads coming up ahead is inviting the market to take a little bit of this profit currently. So looking at how the markets perform, specifically the Straits Times Index, however, we do find support coming in through around the 3,500 level resistance turn support that's been holding up the markets despite the mild rate that we are seeing at this moment. So for the rest of this week, what are some of the key items to look out for? I'll really categorize them into two different categories. And first, it's really earnings, how earnings might perform as we step into the US earnings season from the end of this week. So the bank earnings are expected to trickle in the US session on Friday, with the likes of JP Morgan and Wells Fargo to lead some of these announcements. The market currently do see the likes of the XLF ETF, the financial sector ETF, and also the KBE ETF, the banking sector ETF, within the S&P 500 index, really popping its head up against earlier highs, and itself I think forms a rather strong trend, and certainly one to look out for as the market expect the financial sector to really see about 11% earnings growth based on FactSet's projection. So really one to look out for, and we'll also talk about this more in details in tomorrow's webinar that I will be hosting at 6:30 p.m. And following that, we also have the fact that economic indicators are expected to be ones watched this week. So US CPI will be due on Friday as well, and market is currently really following inflation movements rather closely. Earlier this week, we have heard from other Fed voters, including Fed's Bostic and Fed Williams, sounding their alarm with regards to inflation and how that might affect interest rates. I think for the market right now, the current median consensus sits at 0.1% for this release for December, and compared to the previous release of 0.4%, is expected to see a little bit of this moderation. But we have certainly also seen average hourly earnings and commodity prices pick up through the month, so something to see whether we can have CPI following and trending across in line with this as well. In terms of how that might affect the markets, I will look into the dollar index. We're seeing a little bit of this reversal since the start of this week, and any of this gains towards that 61.8% Fibonacci retracement level around 92.50. I'll be interested to still fade it in the longer term, so certainly one to keep a lookout for as well. And in terms of Asian markets, into the end of this week, we have China's trade numbers that's going to be due on Friday. Market once again expect a moderation, and should any surprise be seen, I think that's going to once again be a boost for Asian markets in this current trend. So do keep a lookout for these items.